Hi, I'm Richard Murphy, and this is the fourth in the video series on the importance of tax transparency that I am hosting, and which is being made jointly by the University of Sheffield, where I work as Professor of Accounting Practice, the Global Initiative for Fiscal Transparency, and the International Budget Partnership. In this video, we will be exploring the role of taxes in society. The role of tax in society is often neglected by tax specialists, but is fundamental to understanding the relationship between tax, government, and all those parties who would benefit from understanding just what a government wants to achieve when creating a tax system. Much of the material in this video is based on the Global Initiative for Fiscal Transparency publication, Making Tax Work, written by me and my colleague, Andrew Baker, who's also based at the University of Sheffield. It's available as a PDF download. What we suggest is there are at least 6 reasons for a government to tax. The first is to raise tax revenue as a part of the macroeconomic planning that any government does for its economy. Secondly, the power to tax is a literal representation of the sovereignty that a state has over its jurisdiction. Thirdly, a state is very likely to want to redistribute income and wealth through the use of taxation. Fourth, tax lets a state reprice goods and services that it thinks the market has mispriced. Fifth, almost every government wants to reorganize its economy in some way using what is called fiscal policy. This involves the government either running a surplus when tax revenues exceed its spending, or a deficit when spending exceeds tax revenues. These surpluses are used to suppress or stimulate activity in an economy, usually to encourage full employment or some other socially desirable goal, or to tackle inflation. Lastly, tax raises democratic representation, as people who pay tax tend to vote. Importantly, the fact that 5 of those reasons to tax have nothing explicitly to do with raising tax revenue, and do instead emphasize other roles of tax, including as a function of macroeconomic control of the economy, shows how important tax is as an instrument for the delivery of a wide range of government policy. It is vital to understand this. Looking at those broader policy objectives for tax with regard to social policy, tax has the following uses. It can redistribute income and wealth. It can relieve poverty. It can support families or others in society. Vitally, it might be used to support socially desirable behaviour, e.g. saving or investments of sorts that the government wants. It can also promote activities that the government wishes to encourage, such as education. In the same way, tax can be charged on goods that are socially harmful, that the market might not price appropriately, such as carbon, alcohol, and tobacco. When it comes to tax as an instrument of economic policy, the role of tax is embedded in the government's fiscal cycle. To understand this, it's important to appreciate that the amount available to a government to spend in a period of time is made up of the total sum of tax revenue collected in that period, plus the change in government borrowing during that period, whether an increase or a decrease, plus the change in the amount of government-created money in circulation during that period, plus the amount of aid provided from outside sources to fund the government during the period. This equation shows that government spending does not necessarily need to be funded by taxes, at least in its entirety. However, the extent to which a government runs a surplus or deficit does have economic consequences. When government spending exceeds the total of tax revenue and external aid generated during a period, there is a risk of inflation or rising borrowing costs. On the other hand, the trade-off is that the economy might grow faster than might otherwise be the case. This is why running deficits can be attractive to many governments. Importantly, though, the reverse of the above is also true. Government surpluses, where total revenues exceed spending, can reduce inflation and borrowing costs, but the risk is slower growth and poorer government services. As a result, it should be obvious that taxation is a fundamental element in macroeconomic policy. Managing all of this is a delicate economic balancing act that no one looking at a tax system can ignore, because these facts must always be taken into account by government. Looking at another of the roles of tax in society, a government can tax as part of an industrial policy to attract business activity of the types that it wishes to encourage. So it might, for example, offer tax allowances to some types of business, or it might exempt some types of export from tax. Or it can create lower taxes in some areas to encourage more growth within them. There are questions as to whether these policies actually work and whether direct grant funding might be better, but they remain commonplace in many countries, and you should therefore understand their importance. In addition, an often ignored aspect of tax policy is that it can also be used as a foreign policy instrument. For example, it can be used to lure foreign direct investment into a jurisdiction by offering low tax rates. Or it can be used to provide artificial tax incentives, for example, by encouraging tax haven style activities such as the creation of secrecy around banking transactions that are screened from international scrutiny. Alternatively, and in contrast to tax haven activity, tax cooperation with other states can be offered in exchange for aid or other finance. The last point is included to make clear that not all options in this area are negative. Positive use of tax can be found in the international arena. What should also be noted is that growing international scrutiny in this area that is giving rise to a general move against tax competition means that demands for international tax cooperation are growing, meaning great care has to be taken when working in this area. There are no right and wrong answers when using tax as a foreign policy instrument, but there are considerable risks from either appearing to be internationally uncooperative or from actually being so. The critical point that all these issues raise is that when considering the design of a tax system, it is all too easy to miss the fact that tax is not just about the raising of money from a population, many of whom will usually be a little reluctant to pay it. As important is the fact that tax has a much bigger role to play in society. And one of the major reasons for tax transparency is to explain just what those other roles are, why they are important, and what impact they have. This is why the gift tax principles place such an emphasis on tax transparency about the tax policy goals that are being prioritized at any given point in time by government, and the reasons why they have been adopted. Tax transparency emphasizes that tax should be the subject of properly informed public debate. And it is this that the gift principles referred to in the previous video can stimulate and encourage. Unless this is understood, the broader understanding of tax management for the benefit of society as a whole may not be achieved. That's why we're talking about it here.